Hey, what's up, guys? This is Sam, and I'll be doing the free video for August 6th, 2021. So, again, like always, I just finished recording the premium video for the folks in the Gold Room, and every Friday we do the same thing. We go through all the market indices, we go through commodities, bonds, currencies, um, different sectors, just to get a top down view of the market and kind of just see where the money's flowing. And in the free videos, I always just try to bring you guys kind of one major point that's really important. And this week, I'm not going to have so much stock picks necessarily, although I'll show you a couple sectors. But I just want to show you a couple things, mostly around the dynamic around money flow and the bond market, right? Because we had a pretty pivotal last, let's call it 2, 3 days in the bond market. And it's really, if it continues, and I think it will, it shapes or reshapes how money is going to flow into the market. It's been an all tech market for a long time now, for a few months. But there's a potential that that might stall out. So let me show you what I'm looking at. So first up, let's look at the Dow here. The Dow is kind of in the middle. It's not as good as the S&P or the Nasdaq, but it is better than the Russell. But it did actually break out of this trading range that it's been in. Right, it's been in this giant box, roughly from about 335 to about 350 in this big trading range here. We did break out today. However, we did it on probably one of the weakest volume days I think I've seen in a long, long time. So it's not a breakout that's totally trustworthy, but it is a breakout. All right, I can't deny the price action, even though the volume is laughably bad. So understand that this index here, the Dow, the reason it's kind of in the middle is because it has some inflationary things like financials, energy, things like that, some industrials, whereas the Nasdaq is pretty much all tech, right? So let me show you the bond signal first because I think this will make more sense. So let's go over here to the bonds, and I'm going to choose to show it to you via the ZN, which is the 10-year note futures. And I think this is the best instrument to use to track. And we were looking for a potential top in bonds beginning even just yesterday. Well, actually, I started looking for it on Wednesday, but definitely going into yesterday. And here's what I was looking at that gave me a signal that this was going to be kind of a top in bonds. And honestly, I think this might be, I don't want to call it the top, but it is going to, I think this pulls back a lot more. So you see this high right here, right? Look on the far right here. You see that initial first high? And then you see how you made a higher high here, right? But look at what your indicator did. This is the momentum indicator down here. And you see how on the first high, it put in a high right there. And then on the second higher high, it actually put in a lower high, right? So your indicator went down as price went up. Here, before, just so you can see how it's supposed to work, you see how it ticked higher? And then on the second push to this high here, which is higher high, it actually ticked lower. That's not correct. So that was a big momentum divergence. And then you have this previous high right there as indicated by the green line. And you see how this candle got above it, closed above it, and then flushed back the low. When you have that, that's called, well, the way that I'm viewing it at least, is it's a bull trap, right? And if you're familiar with Wyckoff, it would be called a up thrust, but it's essentially a bull trap, right? Everyone gets bulled up above the breakout level, and then they don't see the momentum divergence, and then they get flushed out really, really violently. And I think that's still what's at play here. So long story short on ZN, I think we're heading back to this 50-day. And it should be supported there, to be honest, but it is going to be a pretty steep drop if that happens. So why is that important? Well, if you compare ZN with tech, you'll notice that when ZN bottomed and then started rallying, tech started outperforming everything. And there was even days where the Russell would be red, down 1%, and tech would be up 1%. And the reason that is, at least my understanding of it, or the way that I look at things, is because of the bond market, right? Tech likes bonds to go up, and every other part of the market that's pretty much not tech likes bonds to go lower. So if this dynamic happens, and basically what I'm saying is what I'm kind of seeing in the cards here is we're gonna have to fill this space back down to the daily 50. If that were to happen, then you won't want to be in gold. You'll want to be flat or short gold. You will probably not do as well in tech, and you will do very well in financials, materials, energy, industrials. So I would focus there going into next week, and then just pay really close attention to bonds, because I think the money flow in the market is 100% going to be determined by the flow into the bond market. And if we bounce here, even though I think it gets sold, that will favor tech. And then if it gets sold at resistance again, then that'll start to favor all those sectors that we talked about that are inflationary. So that's what we got for you this week, guys. I hope this was helpful. Before you leave the page, make sure you leave us a like or a dislike. But regardless of which one you choose, make sure you subscribe to our channel so that you don't miss out any of our content. And it also helps us out in getting the word out to other folks that might want to see our stuff. So that we would appreciate that. All right, guys, thanks for stopping by. Have a great rest of your Friday, and I'll see you next week. Cheers.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me